2023 was the hype, 2024 was the test, but 2026 is where the real money is being made. We are in a super cycle, the kind we last saw in the 1990s internet boom. The year 2023 was loud. It was a year of demos, of breathless headlines, of futuristic promises that felt both incredible and distant. Wall Street traders shouted into phones, captivated by the explosive hype cycle. 2024 felt different. It felt real. The noise quieted down as companies began the hard work of testing, integrating, justifying the immense cost. Now, as we stand in the early days of 2026, the feeling has shifted once more. This is not hype. Let's be blunt about the problem. Your money is losing value. The cash you have diligently saved in a bank account is not growing. It is shrinking in real terms. With inflation as a constant headwind, a 1% interest rate is a guaranteed loss in purchasing power. It is the quiet crisis facing millions. The old playbook, save money, buy a few safe stocks and wait, is no longer sufficient to build meaningful wealth for retirement. So the economic landscape has fundamentally changed. Your financial security depends on adapting to this new reality. Investing in yesterday's winners is like bringing a horse to a car race. You might eventually finish, but you will be lapped many times over by those who embraced the new engine of growth. The AI Supercycle is that new engine. It is creating a dividing line between companies leveraging AI to become faster and more efficient and those being rendered obsolete. Tier 1 is all about the infrastructure. Think of it as selling the picks and shovels in a gold rush. Artificial intelligence is not magic. It is powered by immense computational resources. These resources require two fundamental things: data centers and massive amounts of electricity. AI models are incredibly energy intensive. This creates a huge opportunity for companies that build and operate the physical foundation of the AI world. This tier includes data center operators, the firms that provide the sophisticated cooling systems they require, and the energy companies that can supply the vast, reliable power grids needed to keep them running. This is the most foundational play. This is the power behind the brain. The demand for processing power is insatiable, which directly benefits the chip makers like NVIDIA, but it also creates a cascading effect. More chips mean more servers, which means more data centers. Companies like Vertiv, VRT, that specialize in critical digital infrastructure and cooling are essential. All of this hardware consumes an unprecedented amount of electricity. This puts a spotlight on energy companies, particularly those in nuclear and in renewables, like Tri-City or their Constellation Energy, CEG, that can provide clean 24/7 power. These are the companies laying the concrete and steel foundation for the entire digital revolution. Tier 2 is the efficiency play, what we call the silent winners. This tier focuses on established non-tech companies that are using AI to dramatically improve their operations. The story here is not about inventing new tech. It is about applying existing AI to save money and gain a competitive edge. Think of a major hospital using AI to analyze medical scans, reducing diagnostic time and improving accuracy. Consider a logistics company using AI to optimize delivery routes, cutting fuel costs by 20%. These efficiency gains drop directly to the bottom line. These are often less volatile, more established businesses. A manufacturer can service machinery before it breaks, avoiding costly downtime. An insurance company can process claims faster and more accurately. A giant like Microsoft, MSFT, provides the software tools like Azure AI that enable this entire tier. The gains here are steady, defensible, and can compound powerfully over time. Tier 3 is the consumer shift, personal AI agents becoming the new app store. A new wave of companies will change how we live, work, and play. Together, these three tiers form a comprehensive plan to engage the AI supercycle. They offer a path to move your money from stagnant, depreciating assets into dynamic, growing sectors, defining the 21st century economy. The key is to understand the mechanics, and follow a clear, simple plan. This is your chance to turn anxiety into action and action into ownership. Of course, risk is a real factor. No investment is a sure thing. The technology sector is known for its dramatic swings. Putting all your money into a single idea is not investing, it is gambling. Putting all your money into a single stock is not investing, it is gambling. The key to long-term success is managing volatility with a disciplined strategy. One of the most effective methods is dollar cost averaging. Invest a fixed amount on a regular schedule, say $500 on the first of every month, regardless of the market. You buy more when prices are low and fewer when prices are high. Over time, this smooths your average price. This removes emotion and turns volatility into an advantage. For broader AI exposure, without picking single names, consider exchange-traded funds, bots, robo. Even when picking individual stocks, balance is crucial. NVDA, MSFT, concentrating your entire portfolio in just two names is high risk. With lofty valuations and intense scrutiny. Balance leaders with other plays from your three-tier strategy. A chip maker, infrastructure like VRT, data center cooling, energy like CEG, nuclear power. We are standing at a pivotal moment in history. The changes coming with the AI supercycle will be profound, touching every aspect of our lives and the global economy. This is not a distant future. It is happening now in 2026. The tools are here. The capital is flowing. The opportunities are emerging right before our eyes. You do not need to be a tech genius or a Wall Street insider. You only need to see the direction of the current and choose how to navigate it. The future is never guaranteed. New technologies can face setbacks. Regulatory hurdles can emerge. Market sentiment can shift in an instant. But those who position early in major cycles reap the greatest rewards. The time for waiting and watching is over. Waiting for certainty means missing the opportunity. The easy gains will not last forever. By taking small, deliberate steps now, you give your investments the most valuable asset of all, time. Time for growth. Time for compounding. Time to ride the crest of this powerful wave. In this new economy, will you be a consumer or will you be an owner? If you want to start building your plan for this new era, comment portfolio below to engage with this community of forward-looking investors.